Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday's action, we came in very strong. Was another Vaccine Monday, going all the way back to the first time when Pfizer announced that vaccine was going to be approved about 5 weeks ago. We saw that huge spike. And every reaction, every Monday, no matter what the news was on a vaccine, each reaction became less and less. Today we had a very strong reaction as they began the distribution of the vaccine. But shortly after that, we saw a lot of pressure come in on the energy stocks, and then all of those hot IPOs from last week, everybody started taking profits, and then the markets began to crumble, and they continued to sell down. The S&P went into negative territory, and the other indices ended up in a mixed type picture. The other thing that was floating out there was the stimulus talk, and it's just that, it's talk. I continue to tell you for the last 3 months now, maybe longer, these folks aren't interested in doing a deal. They keep breaking it up and reslicing it, and now we're going to be very soon into Christmas week. It doesn't appear they're going to do a deal. Maybe they'll throw something together by Friday. This is a big week, as I mentioned in last night's video. There's just a ton of things that has to happen this week to get to the end, and everything will happen. It's just a matter of what type of reaction that we get. As we look to Tuesday, we're going to see some information come out. We have Empire State Manufacturing coming out, industrial production, and we have the capacity of utilization. Now, all of these numbers are expected to show a reasonably positive number, so we'll see how they come out. I don't really think they're going to be that material, as folks are looking toward the rebalancing and all the other things that are going to be unfolding during this week. One of the things that I've been talking to you about, and I'll go through a lot of detail here in a few minutes, is our database continues to liquidate. It didn't take much of a downtick to signal quite a few sell signals. I'll go through all of these details here, but as this week unfolds, we're likely to see a continuation of a lot of volatility. Because of the downside reversal that happened, it was not a key reversal, but it was a reversal. We're likely to see some consolidation before we're able to move out of this pattern. We got up to 36.97, market turned south, so there's going to be a ton of resistance, and it's possible that that outside reversal that we saw last week at the 37.12 level is going to be a significant price point. We don't know that yet, but the next couple of days I'll be able to tell whether that's going to be challenged or not, or whether it's going to be a key part of the pattern to watch in the weeks to come. Let's go ahead and take a look at the charts, see what they're telling us for Tuesday. As I review the WaveTech database, as I mentioned in the opening comments, we did see a substantial amount of selling, about 1,200 sell signals versus about 210 buy signals. So we had a negative rotation on the short-term database, and we dropped from a 72.26 down to 68.05. I mentioned this in last week that I thought we dropped to 68. It definitely appears that we're going to see more liquidation in the short-term database, and if it does decline below 62%, then the next levels to watch for will be between 56 and 50%. So it could get more material as we go forward. Now, as I mentioned in yesterday's video, I'm expecting a fair amount of volatility this week. While everything looked like it was going to start the week off on a positive note, that configuration is starting to be challenged already, especially with the liquidation that we're seeing in the database. As I begin covering the S&P 500, The futures are up about 6 handles right now overnight, but yesterday's action, we did see the market trade up, not quite to the RXT number. We traded to just above R3. 36.89 was R3. The high was 36.9150, and the market's reversed from there. We were trading above that 10-period moving average. It looked like the PPMs are going to try to turn up, but everything has continued to turn south on PPM 1 and 2. PPM 3 is starting to show some signs of support, but that support level is way down at the 35, 33 level, so that's substantially below where the markets are. But the configuration on a short-term basis suggests that we could see a continuing decline today. We could see a decline toward the S1 at 36.29, S2 at 36.17. So expectations for the futures right now are for an R2 S2 number, so looking for a little more volatility. So 36.63 on the upside. On the downside, the extreme should be 36.17. We'll see how they trade early in the morning. Looks like we're going to try to come in on the positive side, trading up towards the R1 level. The configuration on the SPX is a bit different than the futures. We did finish down 0.44 in the session, down 15.97 handles, and we're seeing the PPMs continuing just to be lackluster, some minor upside, but nothing here that's going to be able to hold the market. Now, the 21-day moving average is 36.36. A penetration of that level, that's rising about 5 handles per day, so it should be 36.41. That's going to be basically at, as we look at the grid for today, it's going to be an S1 number. So if S1 is taken out at 36.38, then expect to see a further move down to 36.27. We could see an S3. This reversal that we saw yesterday was pretty significant as we traded all the way up to the 36.97 level. The RXT number yesterday was 3702.69, so we came just short of the RXT number and then reversed. So the pattern is somewhat vulnerable to further downside, and if we do get a daily close below the 21-period moving average at that 36.38, 36.41 level, depending on how it gets calculated tomorrow when we see the prices, we are likely to see a potential decline back toward the 3600 level and possibly head toward the 40-day moving average. It looked like we were going to be able to print this market up as we were coming into the session today, but that reversal will need to be watched. As I mentioned in covering the futures, we are looking for a slightly higher opening. The expectations for today will be an R1 36.72 with the possibilities of our S2 36.43 with an extreme of 36.33 on the downside. In spite of the upward strength that we saw in the NASDAQ yesterday, we continue to trade below the 10-period moving average. And I think this is significant. I think we're going to be sandwiched between the 21-period moving average and the 10-day moving average. It's 12,087 is the 10-day. The 21 is 11,914. As we look at the market grid for today, the R1 number is 12,507. The high so far overnight, 12,488. The low, 12,423. But S1 is 12,417. I think we're likely to move further down into this sequence between S2, S3, which will put us down into 12,367 to 12,317. You can notice that the STX number is 12,272, very close to that 21-day moving average. The next market that I'll cover is the U.S. dollar. The U.S. dollar continues to decline. The 10-period moving average has finally started to signal the potential for a bottom. You'll notice that PPM 1 has crossed over its first and second derivatives. PPM 2 is setting up a bottoming pattern, as is PPM 3. So I think we're very close to a bottom in the Dow. We should see a move above the 10-period moving average, which is currently 90.85, and head toward the 21-period moving average on the upside, 91.51. And this should unfold over the next 3 to 5 sessions. And this pattern overall, though, is still negative, as the weekly charts are really what's driving the pattern on the downside. You can see the PPM1 is at a minus 0.26, but we are seeing PPM1 and 2 actually reverse. So what this tells us is that major resistance now, 92.22, and that number is dropping at about 22 points per week. So that number will be moving its way down into and around the 91.50 over the next 2 weeks. So I don't see any huge bottom or any reversal here, but I do see some stabilization coming into the market. The final market that I'll cover tonight is gold. Gold continues to drift in this sideways range. We did print down a bit yesterday. We printed down to the 1832 level. I talked a lot about the lows being around the 1824, and we did print down toward that level. As we look at S3 for yesterday, we printed down to 1820. Even S3 was 1819.30, and markets finished toward the lower end of the range. We're seeing some strength overnight with gold up $11, and I continue to see them hovering around this 21-period moving average. 1843 is the key pivot number there, and we could see the market move back up towards 1872. If we hold yesterday's low, which is the 1820 level, you should be able to play against that for a small buy for maybe $30 or $40. But overall, this is a market that's locked in a trading range at this time. This will complete tonight's video. Thanks for watching. We'll talk to you tomorrow night.